Hello, I'm Michael Hainsworth from the Toronto Stock Exchange. Jacques, could you recite your full name and title, please?
Oh, that's going to be a long time. So my full name is Jacques Alexandre Caussignac. You can call me Jacques or Jack. And I'm Vice President for TMX Markets. I head a team that manages innovation, growth, products, and services.
So your business card is like one of those giant novelty-sized lottery checks?
Exactly. Try to keep it long and thin.
So how does TMX find new product or service ideas?
So that's the million-dollar question, even maybe more than a million. I would say that coming into TMX and looking at everything that's out there for us to try to maximize, the problem is never the ideas and the number of ideas. It's more about finding the right one that fits a client need. And I'm going to repeat this often. Client needs are at the basis of everything that we try to innovate for. And in that sense, it's more about a filtering kind of exercise.
So what does financial innovation mean today?
This is all about flexibility. So financial agents in the market play a big role in trying to adjust their risks, adjust their opportunities in real time. And this real-time factor is not new, but it's still kind of gaining momentum. So in some parts of the market, like fixed income, it still has kind of a learning curve to grind, and we're seeing that. We're seeing basically markets getting more granular, hedge funds and other types of players playing a bigger and bigger role, and that's what TMX Group is trying to bring together, is have all of those different participants exploit technology, exploit innovation, and bring it all together in a cost-efficient fashion.
Caussignac is also innovating to protect Canadian investors. In 2012, the Financial Times of London blew the lid off the LIBOR scandal, revealing market manipulation of very short-term interest rates that contributed to the 2007-2008 stock market crash. Today, the TMX is playing a role in preventing that from happening again.
So if we focus on Canada, these types of rates are a bit ring-fenced from that story because Canada does not use LIBOR. We use another rate called CDOR, which thankfully has not been manipulated, and there's no history of that. But that being said, because Canada is intertwined with the global market, we now need to respond to this shift going to transaction-based rates. So what's been happening in the last few years is that the global community is looking to move away from interest rates that are survey-based, and they're converging on rates that would be transaction-based. So it's much more about having trading engines spit out real transactions on real interactions in the market, and then having rates that reflect that and that can be used in multiple markets around the world. And that's what's going to happen for the next few years. And it's going to be a tectonic shift because it has an effect on not only borrowing costs for corporations, but also derivative products, both on the exchange-based kind of products like we have at TMX, but also on over-the-counter products. So it's something that will have ripple effects for a long time.
Caussignac has been at the forefront of environmental, social, and governance for 10 years now, and he believes 2019 is the year for ESG to go mainstream.
When we started looking at everything that's what I would call sustainable finance in general, at first it was seen almost like as a separate asset class. Now it's more being looked at as, well, to look at an investment and to use a mindset of looking at how the companies respond to environmental, social, and governance challenges. That's a way basically to look at how companies look long-term for their business model.
In the age of the algorithm, what role does the human play in innovating in the markets?
When you think about computers talking to computers, that's just protocols being exchanged, right? but we still have humans playing a central role in the decision making, in risk management, and in everything that surrounds those algorithms talking to one another. So that's how for TMX, what we're trying to bring is ease of use in adjusting risks, in making sure that people understand their positions, that they understand how the market is behaving. So transparency, of course, is kind of core to all this story, and for us it's just a matter of responding to those clients' needs.
Artificial intelligence today is very artificial and not very intelligent.
I think one thing that AI is not there yet, although it's present in all of what's happening, not only for how the clients exploit AI for interacting with the market, but also our regulatory divisions, for example, they monitor the market with more and more AI. So that's all stuff that is important, and it's continuing to evolve. But that being said, when you talk about creativity, interaction with the clients and their needs, you still need people to make sure that they understand the story of all of those participants to a market.
So we don't have to worry about artificial intelligence stealing all our jobs at TMX?
Well, I'm sure they'll steal mine at some point, so I'll live with that.